Thank you very much. This morning when I opened my closet, I was trying to decide what to wear. Normally when I come to a KBA event, I wear a suit. Suited and booted, as they say for bankers. But instead, I decided to wear something made by a woman entrepreneur here in Kenya. Isn't it beautiful? A piece of art. And the thing about women entrepreneurs in Kenya is they come from a very diverse array of backgrounds. This particular entrepreneur is a salaried employee. In your data, you would give them a salary loan, and you have no idea she's got a side hustle. How many entrepreneurs are salaried with a side hustle, right? So I decided to wear this piece of art in honor of the women entrepreneurs that we are here to celebrate and think about today. So one of the downsides of going after others is some people already include the data you wanted to quote, the statistics you wanted to wow everybody with. But I want to underline one that Christine has already shared, which is that women, micro, small, and medium enterprises, only 27% have a bank account. So 1 in 4 women who run a business have a bank account, whereas 45% of men who run a business have a bank account. Almost twice as many, and still not enough. Why is it that more than half of men and women, more than half of men and 3/4 of women who run businesses in this country don't even have a bank account? We're talking about credit today. I'm just talking about the first step to getting that loan. So FSD Kenya has long been associated with demand-side data, the FinAccess survey that we run with Central Bank of Kenya and the Kenya National Bureau of Statistics. Since Gideon did it, can I have my FSD Kenya colleagues give a little wave? I've got several in the room. We have long been associated with that demand-side data, and FinAccess has been launched at least once in this room, if not more than once. But the power of adding demand-side data and supply-side together is what we're talking about today. Because you can know what's happening on the ground, but if you don't know how that's being matched with what's being supplied on the market, then you're missing out. And what are the things we can see when we bring together demand and supply-side data? We can see are qualified women being rejected more often? We just heard that from Gideon. We can see in our FinAccess data how many people have been rejected for a loan, both men and women. We can look at the supply side data and see how many formal loans. We can't see the informal sector, and that's a really important part, as we know. Demand side data is really the only way to see that informal data, but we're looking at the formal data here when we think about the supply side data. We've heard women repay better. Can we show it on a dashboard? And what are the reasons that women pay better? Is it because women have to jump through so many hoops that so few of them actually qualify that the ones who qualify actually do repay? Maybe. Is it just that women are so thankful to finally get a loan that they're not going to risk not repaying it so they can get the next one? It was so hard to get there, right? So what is it that are driving those things? The supply side data won't tell us that, but there's things we can do to explore and find out. And so there is power in disaggregating this data. Just adding a gender box can help do a lot. I remember when we were launching, or when the government was launching the Guarantee Fund for SMEs, there was a requirement for a gender box. There was no requirement for what percentage of women needed to be reached. The banks just had to report how many women. Well, the first report was humiliating because there were so few women. Now, even though there wasn't a requirement on the percentage of women, the fact that the banks had to say, I'm looking at you, KBA, how many women actually were benefiting from that guarantee fund, they were embarrassed, but more importantly, they were motivated to change that so that the next time the public data came out on how many men and women were benefiting from that guarantee fund, there were more women. We weren't quite at gender parity, but at least there were more. So the simple act of including the box motivated change. I was laughing when I was looking at the slides on Slido. Those were not gender disaggregated. And yet 7% of you told us that it was your boss who sent you here. I would have loved to have seen the gender disaggregation on that. So many times when we're in an event that is meant to target women, the room is full of women, and I am delighted to see men here. So let's give an applause to the men who are here. And I won't ask you to raise your hand if you were one of the ones who said your boss sent you. Maybe Gideon, your boss would have sent you 22 years ago and you would have, said you had to come, right? But my point is that when we gender disaggregate, we can then ask the next question. It might be that more men answered that it was their boss who sent them here, but that doesn't tell us why. It doesn't tell us why their boss sent them here. Maybe their boss really wanted to come. Maybe there's some women in this room whose male boss said, I really wanted to be there, but I can't. It's really important for our organization to be there. Please go, right? There might be some people on my team who think that I sent them here and encouraged them to come. Maybe some of them have said yes too. So we've already heard Gideon mention an associated initiative that is linked to this gender dashboard that we're launching today, which is the Women Enterprise Finance Code. And that is hopefully going to be launched at the beginning of next month, along with the National Financial Inclusion Strategy and the medium-term plan for the financial services sector at a very large event, we hope, that will be supported by government to really emphasize the policy importance of financial inclusion and financial inclusion for women and financial inclusion for micro, small, and medium enterprises. So stay tuned for that. I'd also just like to, I would be remiss if I didn't say that this dashboard funding and our support for this dashboard funding came from the Gates Foundation. The Gates Foundation has long been a supporter of gender disaggregated data and the power of gender disaggregated data to motivate change. So we appreciate their generous support and enabling us to generously support the partners who are here today. So what kind of loans do entrepreneurs need? And in particular, what kind of loans do women entrepreneurs need? If you've been listening to FSD Kenya for any amount of time, you know that for the last 10 years, we've been talking about financial health. Financial inclusion has been going up in Kenya. Financial health has been going down. And the way we define financial health is, can people get by day to day? Can they deal with risk? And can they invest in the future? Loans can be a way of helping people do those things, but are they? So if we think about managing day to day, this could be shopkeeper loans, which wouldn't be counted in this gender dashboard. But if I can buy some unga on Monday and pay back on Friday when I get when somebody buys my beautiful piece of art, then that will help me get by day to day and my kids won't sleep hungry. What about dealing with risk? There's two ways I think that loans can help here. One is if you have a credit line. A lot of the digital loans that are out there, what we've heard from customers is what's most valuable about it is not so much that they want to take that loan, it's that they know they can at any hour. If they get stuck in town at 10 p.m. and their car is broken or whatever, they can take an immediate loan and they can deal with their risk, their shock that's happened just then. Now, that may not help them deal with a large shock, but it helps people deal with one of the smaller shocks, and it may depend on how large their credit line is. We also know that insurance is a really important part of dealing with risk. And until we can convince the policymakers and insurance providers to allow more monthly payments for insurance, premium financing can be a really important part of helping families insure their families, especially against health shocks, which we know really put women entrepreneurs in particular out of work. Finally, if we think about investing in the future, there's two investments I'd like us to think about together long term. One is what you may be thinking about already, investing in your business, right? I want to open a new location. I want to buy some equipment. I want to do something big, not a working capital loan, which would be kind of more day to day, but something big, something new. And loans, long term, I like what Christine said, fair finance can be a really important part of those longer term patient capital loans. But there's other kind of investments that are important too, and that's the investments in our next generation. How many women entrepreneurs do we know who decapitalize their business to pay school fees to make sure their kid doesn't get sent home from school and their business suffers for the next few months? So what can we do to ensure that women in particular, who often bear the brunt of those school fees, are able to educate their children and not decapitalize their business, right? That's another kind of investing in the future. So, I think that's, and thank you to my team who gave me all kinds of notes. I'm trying to figure out if I can quote them all. When we think about gender disaggregated data, we want to use it for what getting called product design, what we like to call financial solution design. There are far too many products out there. but how many of them are actually solutions, are actually solving the needs that women and men entrepreneurs have? And so as we think about gender disaggregated data and what we're going to be looking at today, how is it helping us move from assumptions, what we think or feel may be true, to real data that validates the reality on the ground and validates the barriers that these entrepreneurs are facing? How do we use that data to identify those barriers and then turn the products that are out there, or redesign the products that are out there, to become solutions to address those barriers? And how can we be more intentional about reaching more women with fair finance? Allow me to end with a walk down memory lane. And if we really were walking, I would take you about a 5-minute walk away to the first job that I had here in Kenya on Tom Mboya Street at Equity's branch. And I'm moving soon, and I've been going through old boxes of memories and what have you, and I found the picture of the first borrower who I made a recommendation to the credit committee up to. I had like one of those like old cameras with actual film in it. You know, there were you know, the negatives and everything. And there was a woman who had a little shop on River Road. She was selling dresses. She had not been able to access a loan. And so I was making the case, we should lend to her. I've seen her books. She had, you know, not one of these, one of those paper black books that's all ragged on the ends. I'm like, I can see the revenues. I can see how she's doing. I know where she gets her stuff. Let's make her a loan. I took a picture of her. I brought my picture in to show the team. They thought that was kind of interesting. And, you know, Gideon was talking about open finance, which I'm very hopeful about the potential for that for Kenya. But back then, she brought a, you know, printout of her bank account from some other bank because there was no way to send it to them. And we went line by line to see how much she was banking her turnover, right? Because turnover somehow is supposed to be predictive of, anyway. We made her a loan. Now, I actually don't know whether she repaid that loan because I passed that loan on to somebody else. But my point is this. At that time, it was radical to give a women, like a small micro entrepreneur selling dresses, a loan from Equity. It's no longer radical. And yet, it's not quite as easy as it should be 20-something years later. It's not quite as affordable as it should be 20-something years later. And I think that we all can do better for that fair finance that Christine was talking about. Asante ni sana.